Welcome to Kevin Navigates. Today, April 7th. I got a bunch of stuff to talk about. I'm late. I was on a call. And, anyways, it turned this phone down. So, anyways, I would just like to get started and say, welcome back to the channel. Got a lot going on, a lot of things happening. Let's pull out my little cheat sheets here. And let's go from here. Boy, what do we want to talk about first? Um, Not the stock market. Who wants to talk about stock market? Okay. All right, here we go. Here's my outline. Okay. Uh, let's run down on some topics. Trump and Musk latest moves. Of course, the stock market updates. What's happening with me on Carnivore, and a couple bizarre things happening around. Different news stories. Anyways, if you got some questions, just reach out, ask me some questions. First, let's talk about the Trump tariff tango. That's what I'm calling it, Trump tariff tango. And basically, it's about how he calls it Liberation Day. What's happened. I pulled a few headlines up about it. This was this morning on Zero Hedge. He says, "Don't be weak. Don't be a panikin. Trump urges Americans to hold tight as countries all over the world negotiate on tariffs." So it's kind of interesting that I'm curious to see what happens with this whole tariff deal. And is it just a big negotiation tactic? Will he get other countries to buckle? Will he get what he wants? And one of the big things that I really wanted to dive in today a little bit, is this a masterful master plan that a lot of people just haven't uncovered? And that's what I want to talk about, because I'll just jump into it right now. It's with Trump. He's been wanting lower interest rates, and a lot of people don't understand how interest rates work and what the Federal Reserve's role in all that is. So he's gone out there and he's a huge advocate for America, onshoring companies back into America. The whole trade deficit, doesn't think it's fair that other countries around the world impose tariffs on our stuff that we send to them, that we shouldn't be doing the same coming back to us. And a lot of that makes sense. I mean, common sense approach. You have countries like Vietnam, China, they don't want U.S. stuff coming into their countries. And so, they'll tariff it. They'll make it more expensive, but they want their stuff to come in our countries. So is it tit for tat? Is it fair? One thing about tariffs, what happens is that by us buying goods from other countries and having that come into our country, we are exporting what wealth we have back to other countries. So we're using the dollars and the money that we have in this country and sending it overseas, and they're sending us their goods. Now, as Americans love cheap goods. I mean, they love deals. They love, buying cheap stuff. I mean, look at Walmart, Costco. I mean, you go down the list. There's a lot of things that we like. We like buying stuff cheap. So, with saying all that, he has had really good luck by imposing tariffs on some countries to get them to come to a negotiating table. He's had some luck in having countries work with him on it. Now, is this a art of the deal? Carry a big stick, call a big game, have a little bit of pain. I mean, there are countries out there that cannot survive these tariffs. It's really going to throw them in a financial, tail spiral. So, many countries, it's going to be devastating. So the ones that are the weakest are going to, jump in, want to talk, want to solve this. So I think on the short term, and one of the articles I looked at, I think there's over 50 countries that's reached out to him already just in the first couple days to want to talk about this. So when you look at this whole tariff thing, basically taxing other nations, and his whole idea is to bring the wealth back into the United States. So the things that he would like to do is to have actually, the external revenue service, as he calls it, is have, you know, our budgets or our house in order financially in the United States, try to make the government more efficient, try to, and he's never said he's not going to spend less money. I mean, no politician ever spends less money. It's like how could you be more efficient and not just waste and just throw it just away at just irrational or stupid things and whatnot. So you have that whole side of the equation running. But one of the big things I really wanted to talk about, and in this first article, it's like he needs, and he knows this, he needs America, he needs the public to stand behind him on this. Now, the good thing is that you're not immediately going to see a whole lot of price inflation to begin with. It's something that will happen over time, and it will creep, and it'll get to a point where it gets its own momentum and speeds up. So prices will, I mean, there will be inflationary pressure on that. Now, as far as the market goes, I mean, you got to realize that this is hurting the top 1% harder than anybody else because it is evaporating market value in the stock market. And I did some videos earlier talking about, the oncoming downturn. And if you pay attention and if you watch, there's a lot of indicators out there that showed you that this was coming. I mean, this is, some people want to say this was a blind side. This is not a blind side. I mean, he has told you everything that he is going to do. He has spelled it out. He's actually doing it. And if you paid attention and if you have a little bit of savvy and know a little bit, this was a really good. I mean, Friday I was in a great mood. My wife couldn't understand why I was in such a great mood because I made some money on Friday when things really started to melt down. And I'm going to talk about that going forward in another segment. But let's stick back to the whole tariff thing. So he's urging Americans because the bulk of Americans do not have their wealth tied up in in stocks. It may be in pensions and different things like that, or their 401ks and stuff like that. But that even is a 30-day or 6 month reprieve because not everybody's going to get their statements. It's not going to immediate kickback. Where if you're a very wealthy person, I mean, I think Elon Musk was a little upset because he saw $20 billion of his net worth evaporate just on Friday. So, it is definitely hurting the people with the highest exposure to the markets first. So, is that a long-term play? Is he intentionally trying to crash the markets? At first, I thought, well, no. But now, as I sit back and I look at it a little bit more, I actually think that he may actually be trying, and this would be a gutsy move, to actually have the markets tank. Because what happens is when the market tanks, a lot of times, and this is what happened on Friday, because again, this is not trading advice. And as other people I know in this industry say, it's only paper trading. But one of the plays that I had implemented a few weeks ago was I put an options call out on the QQQ where I was betting on basically the triple Qs to go down. And I put that trade in a couple weeks ago, just wanting to play this. And the other thing I did was I put a trade in on TLT, thinking that if that did happen, then a lot of these hedge funds, a lot of people were going to run the bonds. Both things happened. So that, again, that's why I was a little happy, was because you know most people that spend or invest money or put in their 401ks or even fund managers, they're all on the buy side. There's also a whole sell side. So on the buy side is great. That works wonderful when the market goes up in values. And over the last 5 years, it works fantastic. I am more of a perma bear or very cautious on that. I don't like long-term trades. I don't like that unless there's opportunities that are so cheap to go in and buy stuff and do a longer term play. But it's not in my nature to do that. And knowing myself, what is different now than when I was actually working in the industry, financial industry, as a investment professional, was the fact that when 9/11 happened, I didn't understand that, and I did not end up making the money during 9/11 and 2008 when the market did what it did, because I wasn't forward thinking. I didn't look at the signs. I didn't see or hear. I was thinking more fundamentals. I was thinking more geopolitical. I was thinking a lot further down the road, and I didn't see all the little warning signs, the yellow signs, and I mean, they weren't flashing red to me. Now, when I see something that's yellow, it flashes red to me, and things that are green, I'm wondering when they're going to turn yellow. So my whole mind shift has changed, and I notice it when I'm doing my own paper trading, that it has benefited me greatly uh, in that whole different mindset. So with saying all this, is that understanding that when the market goes down, a lot of people run the bonds, and when they run to bonds, they it makes the price of the bonds go up, and by making the price of the bonds go up, what they've really done is made the yields go down. Now, the US has, I think it's $7 trillion in the near term that has to be rolled over. And rolled over means that it has to be refinanced. So if you go back and look back in September, the interest rates on that were going up to the point where it was going to be very expensive to roll this debt over. So one of the theories I've been thinking about is this Trump team trying in the near term to crash the market? And if they are crashing the market, are they trying to make the bond yields go down to the point where they refinance this debt that's coming due? And maybe they're looking at for a month or 6 months or 9 months to get this treasury debt refinanced. And I was listening to a thing where Scott Bessent was talking that I think it was every 1% of that they can refinance, that the one it's 1% less cheaper rate or lower rate than what it was. It saves the U.S. government. I think it was might have been a trillion. No, it was a billion. Was 100 billion on interest payments on the national debt, I think is what it was. It was a big number, whatever the number was on that. So, anyways, is this a masterful move? Is this something that he is orchestrating? I don't know, but it's just a thought. I mean, I always say is that when one hand's over here doing something, you better be watching this hand, because it's always something's happening. Always something's moving. Man, my nose is itching. So, anyways, let's get back into this article real quick, and we'll just run through it real quick. This was on Zero Hedge, and he's basically saying, "Suck it up, Buttercup. Americans, hang with me, be tough." Um, which is very interesting, because in this next article that I found was on Jamie Dimon, and he is the CEO of JP Morgan. Guy's pretty wild. He just had a really famous video that hit about how this work from home is a big scam. Anyways, he's a big player, Jamie Dimon. Now, what's interesting about Jamie Dimon, I'm sure Trump's in this boat, Warren Buffett, all these guys, if, again, pay attention, these guys have been selling stock like it's been going out of style for months, over a year. They have seen this coming. These guys have moved money around to where they were trying not to get hurt. I mean, it's even like when I look at Tesla, and a lot of people say, well, we're going to hurt Elon Musk. Well, Elon Musk, he only owns, I think it's 17% of Tesla stock. So it's like with all of this stuff that's happening with Tesla and these Tesla protests and all those different things, they're not directly really hurting Elon. They're actually hurting their own pensions. They're hurting their own thing. In fact, Scott Besson in the interview that I watched said, this is really not a market problem as far as stock market. This is a problem with the Magnificent Seven. The top seven stocks, because that's what's been holding the whole market up for 2 years now or longer. So it's been companies like Netflix and Apple. They're the ones that have been holding everything up. Nvidia. So it's like again, you have Warren Buffett. He's sitting on the most cash he's ever sat on before. So a lot of these guys are waiting for this. And I was looking at charts of what happened on back in 1987, Black Monday, when that sell-off happened. So it's like this could go a lot deeper, a lot faster. But anyways, Jamie Dimon came out and he wants a quick resolution to this. It just started, the pain, and he really is wanting this whole thing to be over. He goes, there's some legitimate reasons for this action, and he hopes the long-term effect will have some positive benefits for the U.S. So, he sent out a shareholder letter. In the near term, we are likely to see inflationary outcomes, not only on imported goods, but on domestic prices as input costs rise and demand increases on domestic products. Diamond letter marks Diamond's first public commentary on the measures since they were announced days after Trump won the U.S. president. So he's been pretty quiet about it. Diamond refrained from mentioning Trump directly in the letter. He's run JP Morgan for 20 years. It's the largest U.S. bank. And he's kind of the statesman now. He's set to report he is set to report first quarter earnings. So he's in a tough spot right now. He's got a lot of people to answer to. In addition to addressing tariffs, Diamond wrote about America's economic alliances more broadly. The U.S. derives strength from its military and economic ties. So I just did a video. I'm getting ready to drop that one tomorrow on tariffs. The 5 times that we've used tariffs before, what their outcomes were, what presidents used them, why they used them, and gives you a little bit more of a historical take on tariffs. Here's another article I pulled up. Futures global markets tumble and panic sell-off as the VIX hits 60. So for people who don't understand what VIX is, it's a volatility index. It tells us when there's fear and greed in the markets. So it says the U.S. equity futures are pointing to another day of staggering losses, even as they rise from session lows, as Trump doubled down on sweeping tariffs and as the world continues its flight to safety. Again, if you haven't been paying attention to this and you just woke up today and saw this happening, I would really suggest that you pay more attention. I'm not saying that you become an active trader or a day trader or anything like that, but have an idea what's happening. If you're not listening to me, listen to somebody else. I went back and looked at my other videos, and I feel like I've done a pretty good job of warning people. I did a video on gold. I did a video on the pending market crash. I did a video on real estate. So it's like I've been trying to very softly warn people about what's happening without telling them what to do, how to do it, or anything like that. But this is something that it's got fingerprints of, you see it coming. This is a train that you've been watching the light come at you, and finally it's here. And some people are waking up going, where'd that come from? where someone else is standing 30 feet back going, well, I saw this, months ago. Anyway, so S&P futures had plunged as much as 5.5% around the time Europe opened. So you're going to get a bounce. Let's talk a little bit about how to play this a little bit. So, there's a lot of sayings in the market. You never catch a falling knife. When the market's going down, don't try to catch things. But it is a good time to make up a list of things that you're interested in, that maybe certain things you want to buy, certain things that are very interesting. It's a good time to look at, because with this, you're going to have emotions. I did a video on fear and greed and about how emotions play into investing. You're going to have a lot of people that, because of this fear and what's happening, they get scared. They make emotional decisions. When they make emotional decisions, what happens is it's always the worst time in order to take action. So, again, be proactive, not reactive on any of this. Watch someone you can link with, find out where they get their information from. Maybe I don't go it alone. There's other people that I talk with. I have my own circle of people. We do calls. We talk several times a month about this. We have ideas. We're sending notes back and forth. So build yourself a little network, of people, so you just don't get blindsided. There's a lot of people, there's financial professionals. I was trained this when I didn't know any better. They say it's time in the market, not timing the market. It's all, you can make your case for anything. All I can say is that if you were invested in Japan in 1989 or 87, I should say, go back in the early to mid 80s, and you've been waiting a long time to get your money back, and you still really haven't gotten your money back. So I believe in, you send your money and you put your investments in where it gets treated the best, and then always be defensive. I had someone tell me there's five. You look at your hand. There's five things that can happen. Yeah, I'll hold my hand up. There's five things that happen when you invest, and one is that you have really big gains. We'll put a thumbs up to that one. We have small gains. We have nothing happens. You break even. We have little gains, and then we have big losses. So one of the things that you can do is if you can eliminate your big losses and set in stop limit orders to where when the market goes down a certain percent. I know when I was managing money for other people, I always knew that if I could eliminate this big one down here, big losses, I could manage this one and keep it to the point where I limit the amount of money that I lost and capped it and instead of let it run free. It allows this one will take care of itself. So this is a break even. This one, little gains, keeps you in the game, but it gives you opportunities for this guy here. So this guy here, which is, limiting your losses, eliminate the big losses, put your limits in to keep it to very small losses. You can recover and make money. You can't cover and make money if you're having big losses. It doesn't work that way. It doesn't. No matter how much you try, you're catching falling knives all the time. All right. So the next one we're going to talk about article wise was a lot of people are coming out. I'm going to pivot, get off the economy a little bit, talk about Elon. Now, I got a video queued up that I did on Elon. And again, it's just a masterful move that he did last week with X, and basically how he is maneuvering his financial house and taking and these attacks on Tesla and the attacks on Musk. You wonder how much he's going to be able to stomach being in the limelight and being attacked. You had administrations before, and the nation that were so behind Tesla, so behind the technology, and now he's been villainized. I don't think it's fair. I think there are political motives that are happening behind the scenes. That I did a whole thing on George Soros and Indivisible and these basically the playbook of how Black Lives Matters, all these different groups used it last time during the elections. You know, again, whatever this hand is doing here, this hand over here, something else is happening. And a lot of these NGOs, these where this money was funneling to, it was going to billionaires, and they had their own agendas, and they were setting their narratives, and they were doing things to make them a lot of money. And one thing that someone like Soros, who's one of the most famous investors, I laid out his history. I'm big on understanding someone's motivations through their history and their experience and things like that. You know, he's a great investor that, you know, with great volatility comes opportunities to make money. Again, like I just said earlier, this was an opportunity to make money on if you if you had some skills and you had some knowledge and you had done a little bit of homework. This was a great time to make money. And there's going to be a lot of people that make money. There's going to be a lot of people lose a lot of money in this. And I am a huge advocate for educating yourself, and also not only educating yourself, is that you know, educating people around you, and it just makes you wiser, helps you navigate. Anyways, they're cutting price targets on Tesla, and they're talking about how his uh, you know, role in the politics and everything else has been you know, hurting his companies. And don't think he cares a whole lot about it. I think he is doing this morally for the reasons in which I believe he said he's doing it, because he saw a greater threat out there. I just hope they can all keep it together and keep this thing moving. It said, again, Scott Bessent. If you don't know who Scott Bessent is, he is in the Treasury Department. He is the Treasury Secretary. There was a great interview with him and Tucker Carlson, and he's a Wall Street guy. And basically, you know, like he said, it would be easy to keep pumping up the economy, borrowing a lot of money, creating a lot of government jobs. So that's something that looking into this whole, you know, recession, and, you know, someone's going to be blamed for a recession. You go back and look at it. And again, if you look at the employment numbers, you look at all the historical data. I mean, in fact, just by changing the definition of how they even called a recession, it's ludicrous. It's crazy. But the biggest threat that we have to our country is the debt in which we are in. And you look at these secret money printers that have been discovered. There's a great talk about how they work. I'm going to do a video on that and how they make these payments. And they're not recorded. And but anyways, getting back to Scott Bessent, it's a good idea to listen to this guy and actually understand him a little bit, because he is not a Janet Yellen. He is the opposite. He is not a Bernanke. So it's going to be very interesting to see what happens. So they're anti, you know, printing money in the sense of creating jobs and making a false economy, which we had for a very long time. All right. Again, this was an interview that Scott Bessent had with Meet the Press. Talks about a Mag 7 problem, not a MAGA problem. And quite frankly, I don't think Trump cares. I don't think Bessent cares. I think a lot of people that are in control do not care about what the stock market's doing in the near term. Shouldn't say they're immune to it, but again, they saw this coming. A lot of smart investors saw this coming. You know, Buffett, he didn't get blindsided by it. Jamie Dimon didn't get blindsided by it. A lot of people didn't get blindsided by it. A lot of people are blindsided about it. If you're in a mutual fund or hedge fund that got blindsided by this, they're, in my mind, in my opinion, just not doing a good job, or whatever their prospectus or whatever their what they have to do as far as managing money is stringent to the point where they can only do certain things. That's not a good place to have your money. Besant rejects recession talk, calls market turmoil a Mag 7 problem, not a MAGA problem. I agree with that. This market and this wealth has been so lopsided. It's, you look at the Russell 2000, even the S&P, even the Qs. You look at the different indices out there, and it's the same companies leading the charge. That rolls over. Everything, everybody, every dog has it today. Everything runs its cycles. But the valuations on it was just way skewed. This is going back to the tariffs. Vietnam, Taiwan capitulate, offer to remove all U.S. tariffs, boost investment. This is a Zero Hedge article that came out, and basically, you're going to see more countries do this. They know where their money's coming from. So again, just thinking again, when it comes to managing your own money, investing dollars and stuff like that, just get a great, I get a great feeling out of learning. And I think everybody should do that. All right. Enough said about that. So I went over Trump's tariff tango. I went over Musk and his Tesla turmoil. Stock market snapshot. I think what's going to happen here is we're going to see a lot of pressure. I would look at the 200-day moving averages. I would look at the VIX. I would look at what the market is trying to tell us on the near term. And what you're going to have is you're going to have these big gaps. So if a stock is trading in a range, and let's say that it's trading like this, then all of a sudden, it tanks and it goes down. It literally drops straight down. 98% of the time, when you have a drop like this, it will drop until it washes out those sellers. And then at the bottom, down here at some point, that gap from here to here, it's going to fill. It's going to come up. Now, does it go straight up? Does it go up and down? There will be a bounce. Am I saying it's going to go up to where it was? Probably not. Is it going to bounce off the bottom somewhere? It will. It will bounce off. There's a 98% likelihood that it will bounce off of that. What happens is when it bounces off of that, what that does is the people that were holding in here, again, emotionally, then what they decide to do is, as it gets some of that value back, okay, now I'm going to sell that. And then again, it will capitulate back down and it'll fall again. That's what I'm expecting to see happen. If that does, you ride it down as those sellers wash out. Some buyers will come in, they'll run it up. As they run it up, that'll entice other sellers that were holders that wanted to get rid of it, but they wanted to hold. It'll bring them to the market, then they'll sell off, and then that cycle repeats. And it's how the market works. It does it on the way up, it does it on the way down. The thing is most people, when you start talking about shorting stocks, you talk about options, you talk about different things like that. The financial literacy, the financial education is not there for most people. It's talk like if I talk to my wife, who I love very much, and she's very smart in her world, in what she's been trained in. She doesn't understand. Like when I told her what I did on Friday, she's like, "Oh my God, that's amazing! I would love to be able to do that." And I said, "Well, it's something that throughout my lifetime I've been able to do, and it's an interest of mine, and it's it's, it's a skill that I've developed over time. The same way she's developed skills over time that I would not be good at. Um, so, but the good thing is that if you understand these concepts of shorting a stock or using options to protect your portfolio, things like that. And I've always been a little hesitant to really get into that because I never want to see anybody use anything that I say as far as an idea without learning about it in great detail. Because I can go down some rabbit holes and details and stuff like that. But I just challenge everybody to understand those. I think what I'm leaning towards is having a membership or some kind of courses to go into that. I just don't think that I can do that on this channel the way I like. I like using this channel. So, anyways, what else we have here? Let's talk about carnivore diet. So I do have another channel, which is one called Simple Carnivore. Some people are interested about it. Some people are not. I'm interested in it because for me, I'm coming up on a year. It'll be June the 8th will be a year for me. And it's totally transformed, my life in a sense where the things that I can do now, I have so much more energy. I sleep so much better. My blood values are so much better. My just everything's better. And I've been holding right around. I'm 250 to 255 pounds. I had gotten up to 317 pounds. So I'm kind of in that range between 60 to 68 pounds that I've lost. And, one of the most gratifying moments I had recently was yesterday. I was at my daughter's game and it started to rain. So I went out and grabbed a jacket that I had in my truck that I just keep in there and I put it on. And when I zipped that thing up, I looked like I looked like a stuffed sausage. Just getting ready to pop at the seams. I put that jacket on. I had so much room in my chest and in my waist and everything else. So it's not just the weight; it's the inches in which I've lost and just how I feel. It's amazing. I can't say enough about it. I know it's not for everybody, and I don't think there's a single diet out there for everybody. And I'm not here to villainize or say negative things about vegetables or anything else. I can only talk about myself and I can only talk about how it works for me and what it does for me. Is that when I'm on carnivore and I'm firing, I'm not hungry. I have a lot more energy. My mind is so much clearer and I don't have aches and pains. I'm working on a project at my house now because I like using my hands. I do. Some people think I'm nuts, I'm crazy, but I um, just love that. Um, so one of the things I'm doing is I'm pouring concrete in my backyard to make up a patio and outdoor kitchen. And so I didn't go rent or have someone else do it. I'm framing it up. I'm mixing the concrete. I'm pouring it. I'm finishing it. And I'm also building my own steps and owned barbecue and enclosures and stuff. And I'm all doing it myself. My wife is helping me. We love doing projects together. I have my kids. They like doing it. It's something we do as a family. We kind of work together. I have my kids out there lifting cinder blocks and moving things around and bags of concrete. And so, anyways, I guess my point about it is that I like to work hard with doing all that physical exertion. The other day we did 120 bags of concrete, and I think they were 80-pound bags of concrete. So you do the math on how much weight we moved. We actually had to take the concrete bag, put it in. I have a mixer that spins and mixes it. We had to lift the concrete into the mixer. Well, I would mix about 8 to 10 bags at a time, dump it into a wheelbarrow, move it, spread it, and then finish the concrete. And I did that for a whole weekend. And I, if I was not on carnivore, I would have so many aches and pains. I would be, I mean, taking Advil, ibuprofen, whatever it was to alleviate pain. This past weekend, I was laying block and making steps, and I was on my knees. I was on my side, mixing concrete, mixing mortar, whole 9 yards, and just not having any pain. It's been just so eye opening. So I really encourage anybody to check into a more proper diet that is not inflammatory. I did a video on inflammation. The Simple Carnivore channel that my wife and I do, it's just in its infancy. And we talk about talk about what we eat, stuff like that. So again, uh, check that out. Might be something of interest. I'm just gonna basically finish this thing up. Biggest takes for this week. I'm a big advocate. I did a video on education. I did it on elimination of the Department of Education. Where I stand with that is I don't necessarily think it's a bad thing. I think it's a good thing that is coming to an end. I have reasons in the video. I don't play Switzerland, but I lay it out there, let you come up with your own opinions on what it is. I put a little spin on it, and I'll throw comments of what I think. I think by getting rid of the Department of Education is a good thing. I have educators in my family. Some agree, some will not agree with this. There's too much upper management. There's too much um, uh, emphasis put on the middle management and the upper management part of it. And there is, it's almost like the video that I just dropped this morning was on teachers in the way they're cutting teachers and why. You ask yourself, why are they cutting teachers? One of the things I throw out there is because in rural areas, actually the student population is going down. It's not a great amount. We're talking single digits, 2 to 5%. Okay. I throw out a thing there about how to operate the schools has become more expensive with food and things like that. But the big areas that are hitting our education systems is the fact that we have superintendents in these districts that are making an average. This is an average across the country of over $300,000 for that position. We have a lot of administrators, a lot of the budget increases that came to the school districts. The upper and mid-level managers are getting 8 out of an 8% increase or 6% increase. They're getting 75% of that increases to that top third or top half or more of the system. And the teachers are getting 2%, where the raises in the other are around 6%. So, the money's not going in the right place. The thing that I really started to educate myself on, and then as I dove into this, part of why I dive into this is because my wife being a teacher and then having children in that are being educated, it's a personal interest of mine. And a lot of times when I do things on this channel, I'm not trying to make money. I'm doing it because there's interest to me. I think it's important for people to understand. I don't necessarily think it's important that you believe everything I say or whatever, but I want people to think. I want them a part of the conversation. I try to answer every comment that is out there, and I try to always say thank you for joining the conversation, because it's a conversation. I certainly don't have all the answers. I certainly like asking questions, but in the one video that I did on the Department of Education is I went back and looked at all the different programs from the inception, from Jimmy Carter through Bush, through Obama, even into Clinton. I looked at it from a K-12 perspective, and then the college, university, sections. And I have my own opinions of and reinforce why I don't think the Department of Education is a good idea. And also a reason why I don't think that the US government should be in the business of bankrolling education. I remember when I was in college, I remember back during Clinton when basically the federal government came in and took over a lot of the loans. A lot of my original loans were through private institutions, and then it went my last year or two. It all went into it was all government, Stafford, Pell Grants, stuff like that. So I guess what I'm saying is that I think that this latest piece is more on the teachers aspect of it, and why are these school systems in the financial situation they're in? Some of the reasons of why they're in that has to go back to the practice of issuing bonds. A lot of school districts issue local bonds. The biggest buyer of these bonds happens to be the pension companies are buying these, or the pension systems then buy their own bonds, which I don't think is a good idea. And a lot of times these bonds are being issued because they're actually issued to pay for bond debt that was already issued before. So it's like you got a credit card, so you go get another credit card, and what you're using is you're getting advances on that credit card to pay off the interest, not the principal, but the interest on the one credit card you have. That is not sound financial advice or practice, however you want to call it. Also, in the video, I point out how there's a lot of fraud. Sometimes it's through the managers. Sometimes it's the people in charge of these pension plans. Sometimes it's the investment companies that goes down to some of the that are in charge to make these decisions. It range from buying $1 million yachts to just outright fraud. So again, take a look at it. I hope you're getting something out of this. I would love to have more subscribers, more interactions, people on live streams, and I'll just keep plugging at it. So like and subscribe, and I'll see you on the next one.